Hey, what is up YouTube? This is Diligence here, and today we're gonna talk more about market condition in this video. I'll post other videos, including MMAT videos. So this is just gonna be like a recap or overview of today's video. So we're gonna post out a MMAT video later on tonight. And all of you know that I love Expensify, so I'll do a little bit of some analysis on Expensify a little bit. And we're gonna talk a little bit about energy and commodities in general, where the market is going. And in this video, we're gonna talk about exactly where the market is going, some confirmation bias coming out of SPY, NASDAQ, the after effect of what happens with Elon selling Tesla. And because Tesla is one of the leading, basically, 35% of NASDAQ is Tesla. Basically, that's what it is, right? So if Elon's selling that much of stock and basically liquidated some of the options for tax purposes, the option play is actually purely for tax purposes. If you go look at what Elon exactly did on the SEC filing, if you guys want me to do a very detailed breakdown of what Elon exactly did on a tax standpoint, I can do that. Comment down below or like this video or do whatever you can to support us. Sub to this channel too, and then just be like, hey, like you wanna go in depth of like the tax purpose of this, and third of all, I think I'm a little bit distracted a little bit. Third of all, we're gonna talk about some of the missteps people have been doing trading energy. So then, okay, let's get into today's video, okay? So if you go look at the SPY, it's literally trading flat. And if you've been trading for a long while, you know that if SPY is trading flat, that means the general market condition isn't that well. Why? Because people are more likely to place SPY call options than put options. If you go look at the put and call spreads on SPY, you'll realize that majority of time, usually there are about 252 trading days in the entire year, over 51% on the NASDAQ and on SPY and whatever. Most people place usually they place 60% call options and 40% put options, and usually the time that they put call options is significantly more than put options. This is because the global equity market or the global stock market believe that the US market should go up. Why? There are a couple of reasons. One is because the US bond and the US treasury bills usually don't really go bankrupt, and because a lot of real-time commodities, including oil, which right now, even though we're trying to do an EV transition in the next 5 years, but the entire global market still uses oil. And then because the entire global market still uses oil, therefore we are still on a petrodollar sort of calculation, or how to say this in a conventional way. Basically, the entire market still run on oil. If the entire market still run on oil, and oil, if you're trying to buy oil, you buy in US dollars. Therefore, the entire economy is actually based on US dollars. Therefore, if the market is going just generally if you're 1% positive that the market is going to be fine, there's not going to be a recession, the Federal Reserve or the general fiscal policy is going well, and the GDP will increase by a nominal amount, right? Then most people is going to buy SPY call options, quarterly, yearly, or monthly. But they rarely buy weekly, because SPY really go up by a huge amount on a weekly. Therefore, you trade futures if you're trying to do that. But anyways, for right now, the SPY is trading flat. So it tells us two things. One is the general market condition isn't that great, which means if you go and look at a lot of insider report, you look at FAN, you look at all of the composition of NASDAQ and SPY and Dow Jones, you will figure that a lot of insiders are liquidating their asset in equity, which means people like, Big Ray, my boy Big Red, Mark Zuckerberg's been selling options and selling, his stocks in Facebook. Big boys like Elon is selling stock. And Elon never sells stock, by the way. He's been living on debt for the past 10 years, by the way, guys. And this is the first time he decides to do that. And there are a lot of, old Bill Gates is just doing his own thing, right? The Bill Gates Foundation is actually liquidating some of big stock options too. And if you go look at a lot of CEOs on the market, a lot of insiders are literally liquidating their position, and they're waiting for the taper effect. And for those of you who are still living in the euphoria of everything's going fine, it actually won't. Why? Because the taper effects actually won't settle in until November 22nd. Therefore, by November 22nd, we in general as a channel, me and number two, probably gonna liquidate some of our, stock equity positions and probably buy some long-term call options just to hedge our risk. Fear of missing out. What if, everybody's still being really rainbows and sunshine about the entire market and decided to buy more NASDAQ or whatever, then, that will hedge the risk for it, right? But in general, people are waiting for the correction. But when people are waiting for the correction, that means a lot of fund managers and a lot of financial professionals, what they will do is they will slowly contract their positions, which resulted in SPY of this flat action. So a lot of you will have confirmation bias that you think, SPY are probably going to behave like this. Wait a second. If SPY is trading flat like this, generally it's like just trading flat, but have a, break the trend or whatever, and then it will probably generally going flat. But in reality, what will most likely to happen is we'll have a sort of a spike down a little bit, and it will try to reach back up to the 470 mark. And then depending on how fast Jerome Powell decides to taper, right? And then, if they're going to accelerate it or they're going to just look at it and be like, oh my God, inflation is going through the roof. Maybe we're going to increase the interest rate a little bit earlier than we thought. Then, it will reach back to 470 and it's going to have a sharp going down. But again, nobody can predict the market. We're just, basic speculating based on the information we have. But again, if you look at the entire year's NASDAQ performance, you'll realize that, hey, all right, we do think that 420 is a little bit justified in a sense. What's the real fair value? The fair value of NASDAQ probably sits around 400. But is the general market going to really correct that much? Probably not, right? So right now we need to figure out is, okay, 470 is a little bit too high. Is it gonna, have another all-time high? Probably, because people are irrational, right? But is it possible that it's gonna go back down to 450? Most likely. So what you're trying to do is you're trying to basically leverage your risk with some of the individual stock, or if you're playing on portfolios, you want to mitigate risk. If SPY actually dropped to 450, that means that's how much breakdown that is. Let's see. So let's just say 20 out of 470. That's 4 or 5% correction. And then when there's a 5% correction, there's probably going to be a buyback on the second day. You can literally do a little bit of short-term trading there. But again, what you really want to figure out, just for this purpose of this video, is what are some of your long-term positions that you think in the next year, despite of paper, despite of the interest rate hike, is going to be a really good bet, right? You figure that, you weave that out, and maybe wait a little bit and add more of that position. And you're trying to figure out what your energy position are. Are you investing in oil? Are you investing in natural gas? Are you investing in EV? Are you investing in lithium battery? What is your prediction for the next year, basically? Do you think it's going to keep going up? When do you think, oil is going to reach 100? Or do you ever think oil is going to reach 100? And you base off of the decision or speculation you have of there, you either add position on energy or minus position on energy. Financial assets or the sector of finances, you guys do realize that finances are not included in NASDAQ. So the up and down of NASDAQ does have nothing to do with all the bank stocks, have nothing to do with Citibank, Wells Fargo, or whatever. But it does have somewhat an effect on PayPal and everything else. So, and if taper happens, and if you've been tuned in for our video for previous month, 2 month, week, days, whatever, when did you subs? I have no idea, right? You want to know that we're long on bank stock. The reason why it is, if they decided to taper or accelerate the process of taper, which technically speaking, the taper effect's going to happen on the 22nd, that means the marginal profit on banks is going to increase. That means banks are going to have a really great quarter, by the end of 2021. So that would be something that you can potentially add your position, right? So what you really need to figure out right now is, do you think technology stocks are overvalued? If you do, then maybe start contracting your position like what we are doing right now. But in order for you to still, because a lot of you will be like, oh my god, this thing is going up, oh my god. It's like the Tesla, like we actually exited at a perfect price. We exited at where Elon exited right now, actually. But a lot of you are like, oh my god, I still have $100 to run. But again, like, let me remind you, greed and fear are the two main aspects of the market. And if you're really too greedy, there's no way, like, even us, we cannot maximize the profit to the penny. We try to do that, but then it didn't really yell that well because ADD tend to oversleep, and two, I'm a little bit lazy. So what you really need to figure out right now is what's your acceptable return, right? Like, do you think, like, right now, like, I think a lot of you are sitting on like 70% return. Is it like enough for you guys, right? You should contract some of your positions and to make sure that all of your profit doesn't get eaten away when there's a market correction coming. Okay, this is the main purpose of the video. But again, we're not financial advisors. We do not get financial advices, and everything we say on this channel is for shits and giggles. And for those of you who are here just for a prediction, I do think tomorrow Nasdaq will go up a little bit because we might see a energy correction, because all of the degens are trying to short oil and short natural gas. I think you guys are wrong. Why? Because we might have a tight supply issue that the US government doesn't want to tell you. There's only two situations where the US government actually will back the OPEC to increase production. And guess what? They already did back OPEC for increasing production. And they sort of forced internal US oil producing company to basically temporarily or do an emergency output increase. This already basically sent out the signal that we really have a supply shock there. Alright, see you guys on the upside. If you guys love those kind of videos, smash a like button and subscribe. See you guys on the upside.